All right. Morning, everyone. Fire it up here. Okay, sorry about that, guys. All right, let's get going. Okay. Last night was a bit of to an extent, a non-event on the U.S. markets. We had the Fed that came out with its minutes, released its minutes from the previous meeting, which gave a little bit of life to the market for a brief period. You can see where that spike up happened there. Essentially, what they said is the market is afraid of. Or the Fed is afraid of when they start to raise that everyone's going to head for the exits at one time, and they don't want to necessarily take away the language or raise maybe too early. Well, one of the Fed members even said that he was for more easing rather than tightening. So I think obviously pushed back the expectations. The expectation is about a 40% expectation for a June hike. That expectation has dropped now to 16% for a June hike and about a 30% chance of a July hike. So, yeah, I mean, obviously it pushed back the expectations. I think it could be very interesting to see, if there's much follow through. You can see out of the U.S. Treasuries, we did have a reasonable move there yesterday. A little bit of a correction from the previous day, but it didn't fully correct from the previous day. So I'm still going to follow Treasuries. At the end of the day, markets make interest rate policy, not the Fed. So the Fed has to eventually follow what the markets are doing, and I think that's important. Right. If we look at everything else, we had ExxonMobil also traded about 2% lower after Berkshire Hathaway announced that it sold a big stake in the company. We had oil prices that were down significantly yesterday. We have follow through this morning. We've got light sweet crude down again this morning. Brent crude down again this morning, dropping below $60. Light sweet back down around 50 again. So very quickly, this picture changes so quickly in oil. Everyone talks about these big rallies to the upside. So it looks big in percentage terms now, but in dollar terms, it hasn't been all that big. So, this can very easily return back down to the lows very, very quickly. We even had someone yesterday I saw calling for $10 oil. So that's not going to happen, I'm sure. But that's easily a possibility for us to come back and make new lows at least. All right, same thing again today. A lot of the markets in Asia closed. You can see we did have the Nikkei, which traded up to a 15-year high at one point intraday there. We continue to see a real push there after we had some better than expected numbers there recently. I think that weakening yen has finally really started to kickstart the economy there a little bit, and it'll be interesting to see if the Japanese central bank starts to pull back from that stimulus anytime soon. Australia also finished a little bit lower on the session. I think that it's weird yesterday. The action in the mining stocks here was really weird. We saw them kind of hold up early in the session. At about 3 o'clock our time, we saw real heavy selling coming in again, the exact same thing as the day before. I think we sold down about 2% across the board in all the mining stocks. And then as the States opened, we went bananas to the upside. I mean, Anglos, I think, in the UK reversed almost 4% from low to high. I mean, it was an enormous reversal. You don't see that kind of thing often. So it's really, really weird. You can kind of see the flows come in as the States open. There was some real buying there, but there was very little interest in our session and in the London session. So we'll have to see if that's another pattern that plays out today. So watch that toward the end of the session. Our chart of interest today, our charts of interest today, is from Market Watch. It's there's actually a series of charts there, and there were 7 charts, and they were all quite compelling. I just want to pick a couple out of that and show what the is sitting over our heads at the moment. We continue to see the market, which is rallying. You can see the uptrend that we've been in the S&P 500, but there's just some real dissemination in some of the other data. So one of the other charts that looked very similar to this commodities charts is the average hourly wages earned, which looks just like the commodities chart. You just don't see that in markets very often. I mean, if you look at that historically, you just don't see that type of dissemination. If you look here, the commodities chart, obviously that is, typically you don't see that happen as well, simply because the demand side, if the demand side's high, the markets are, it's usually in a bull market of the economy and things are running with it. But that can diverge a little bit more. What you don't ever see for a long period of time continue to diverge to such an extent is the earnings. And if you see the picture here on earnings versus what the S&P is doing, that's freaking scary, and the forecasts have been quite shocking, to be totally honest. So, for first quarter earnings, the outlook does not look good, and you can see the last time that we had that kind of split in the earnings picture, what happened to in the S&P. You can see it diverged maybe for about as long as it has now, or around that sort of time, and then it turned down, and when it turned down hard and turned down ugly. So just keep that in mind. I don't want to sound too bearish, because at the end of the day, you have to go with where the market action's going. But I think you have to be very, very careful not to be looking for a couple percent pullback here if we get one, especially out of the S&P. I think Europe, we're in full-on currency wars at the moment. You can see the impact that the weakening yen has had on the Japanese stock market. That same thing is going to happen there in Europe. It already has happened to an extent, but it might have a little bit more in it. The thing is it's a contra effect in the States. We're seeing that in earnings, and eventually that's going to catch up to the S&P. So just be careful. That it has to flow. You have to think it's going to flow through at some point in time. Obviously, this can continue to go on and diverge even more for a period of time, but at some point it will catch up to it. So just keep that in mind. All right. This morning we had Sibanye Gold, which is out with full year EPS of 170. Guidance was for 175. Expectations before the recent guidance were at 230. So it came in definitely a touch soft there. Revenue was maybe a small beat from expectations. All-in sustaining costs at $1,069 an ounce. True Earths we're going to see later on today. We're looking for full year numbers to be up 2.1%, revenue up 5.7%, Divi at 230. So just keep that, maybe write that down, and have a look for that when we come out later. Walmart out later in the States today, as well as Priceline. Right, in the terms of market data, we had Japanese trade balance is slightly softer. We had Japanese exports, which were significantly better, obviously on the back of the weakening yen. We have initial jobless claims in the States, Bloomberg Consumer Comfort, Philadelphia Fed Business Outlook, Consumer Confidence, and the Eurozone. And then we've got crude oil inventories, which I think continue to have a little bit of a heightened importance out in the States later tonight. All right, let's get into the maps. First thing that I want to have a look at this morning is Cecil. So Cecil, we were talking about this level at 280. We said if we get above 280 here, this thing's probably going to make a move to fill the gap up here near 500. We had a couple little very small false breakouts where we just popped through by about 50 cents to a rand intraday for a very short period of time. Very quickly failed. Yesterday we traded up, I think, to as high as about 78 in the morning, and then we just failed hard. Obviously, some of that has to do with a lower oil price. I think mostly, obviously, that was the first leg down. The second leg down, which really came in the afternoon and really made it ugly, was when they came out and announced that they had changed their dividend policy, which I think is is quite obvious why it got decimated yesterday. I think we're going to see more of that simply because this thing's run so hard off the bottom. The disconnect from this and the oil price has been quite spectacular, to be honest, and we dropped a really significant level here at about 454. So I actually think that and to be totally honest, we've really dropped what would be kind of any sort of trend support here on a bounce. So we're really resuming back into a longer-term downtrend. So we've been in a long-term downtrend here. This bounce is definitely a counter-trend bounce, and I wouldn't be surprised to see us come back down to about 390, maybe even make kind of a right shoulder of an inverse head and shoulder. So that's just kind of a thought more than it is any sort of technical call, but I think there's definitely even more pullback coming in Cecil. All right, if we look at Sibanye here has made, we topped out up here around this level just north of 32 several times. You can see here at 30 bucks is a huge line in the sand. If we drop here at 30 bucks, and there's earnings this morning, which aren't spectacular. Let's actually back it out a touch more so you can see how the 30 actually is critically important. And I would say maybe you could call it 29.90. But if that level drops, you definitely have to think we're going to see a quick $2. Maybe $2.50 of downside here. I think the setup's there in terms of this is usually quite a bullish setup because we broke out to new highs and we put in massive consolidation. But I don't think that the earnings have been good there, and the rest of the gold space has been getting hammered. So just watch this one very closely today. All right, Billiton. Let me shorten this up a touch. You can see here there's quite a big level in Billiton at about 287, which we failed off of. I wouldn't call it a big level, but there's some sort of level there. At 280, there's another minor level I would mention there. You can just see there's kind of we bottomed out here for the short term and then broke down, a little bit of consolidation, trying to get back above 280, and then we failed. So I think if we can get below 280, we can very quickly gap fill to this level here, which is right around 270, 271. I think that's a very short-term target. I think it can go lower. Maybe even come back and probably test the breakout, which is down here around 255 where we broke out from this inverse head and shoulder. But I think we also could see a real correction coming here. Remember, this thing is pretty heavily attached to oil prices. This has been a huge run off the bottom. We saw about a 30% run off the bottom in Billiton's, and same thing. This is a long-term downtrend. This has been a counter-trend move. I think we returned to the long-term trend here in Billiton. All right, BGA, we finally got a reversal here yesterday, and what's been just a really heavy stock of late. You can see here there's definitely some sort of, I would maybe call this a flag pattern here or descending triangle. Either way, it doesn't make a difference. We've broken out, and this one's lagged some of the other banks. I think I'd like to potentially look for a second day play here. Maybe we can get a quick move up, mid 190s or something along those lines. But it's definitely lagged considerably, and we did break out yesterday. So I think for so long as we can kind of hold above, the 186, 187 level, I think this thing is definitely still looking good for a move back up close to 200. All right, the last one we'll look at today is Vodacom. And Vodacom actually made quite a failure yesterday. We talked about this level. Either way you look at it, doesn't matter if you look at it from here or, just, simply as a bit of horizontal resistance around 138. There's definitely a level there. We broke out there yesterday. It looked like this thing was going to take off, and it actually failed quite badly. So I think we need to see how it plays out today. But if we start to trade lower today, then yesterday will definitely look very much like a false breakout, and like we have considerably lower levels to come. So just watch that one very closely. I think this could be interesting as well. And that's it for today, guys. Good luck out there.